QuickBooks Pro Plus Desktop 2022 OneNote presentation. Record receipt of inventory with bill linked to PO or purchase order. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions, 8122, record receipt of inventory with bill linked to PO tab. Also, take a look at the immersive reader tool, topic introductions in the text area too, same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and numbers, presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're starting off with a screenshot of the home page. In prior presentations, we looked at the purchase order, which doesn't actually have a transaction related to us, to it. It's going to be a request for inventory that's sent to the vendor. In our case, we're purchasing inventory of guitars. We're going to then assume that we get the inventory, and it'll have a box of guitars, we're imagining, with a bill in it. And that's when we're going to be recording it with the receive inventory, which is in essence just basically a bill, which can be populated by linking to the purchase order that we created in the past. The accounts that will be affected will of course be the inventory account is going to be going up, and the accounts payable is going to be going up. We'll also have the subsidiary ledger that's going to be related to inventory that'll break it out by unit as well as by dollar amount. Here we are in the Vendor Center and the Transactions tab in the Purchase Order, and we're looking at the open purchase orders that have not been filled. We made one for Fender, which we set up last time as a new vendor, Fender, that we're buying guitars from, because guitars are our inventory. We're going to make our bill, type in the new vendor, which is Fender, and then this little pop-up will show up. We're going to check off that pop-up that will populate the bill for us from the invoice that we made in the past. Notice down here that in order to do that, we tagged on the customer to the purchase order, not because it's needed by the vendor that we're giving the purchase order to, but because we can use that within QuickBooks to then pull that information along and populate the bill with it as well, and then use that as a billable item to create the invoice. And because we did this all linked to basically an item, when we do pull it over into the invoice, turning around and then selling this to the customer that we purchased it for, we can then, it'll populate automatically and pick up the sales amount and not the cost amount. So now we have a standard kind of bill here. It's going to be increasing the accounts payable because it's a bill. The other side's not going to go directly to an expense account, but rather it's going to be driven by the items increasing the inventory item, which will increase the inventory account. And it will also increase the subledger by units of inventory as well as the dollar amount. So here is our trial balance. The inventory has been increased. The other side is the accounts payable that has been increased. If we look at the vendor balance detail, we see the activity for vendor here, our new vendor, and the totals adding up to that 3360, which matches out what's on the trusty TB trial balance. Here's our vendor valuation summary, or our inventory valuation summary, breaking the information out by the units on hand, as well as our then cost, which is the 9626. That should tie out to what's on the trial balance, 9626 as well. If we look at this in just terms of journal entries, it's going to be a straightforward journal entry. We're going to be pulling this inventory in. When we enter the bill, it's just going to be an increase to inventory with a debit and a credit to the accounts payable. So if I was to look at our transactions here, our trial balance for the month of February and the year to date, inventory is going to be going up for both the current month and the year to date numbers because it's a balance sheet account. And the accounts payable is going to be going up for both the current and the year to date numbers being the same because once again, it's a balance sheet account. So inventory was at 6266, goes up by 3360 to 9626, and the accounts payable was at 0, goes up by 3360 to 3360. We would also have an impact on the inventory subledger, which I haven't put down here, but breaking this information out by the units that we purchased, and the subledger then should be tying out to the general ledger for inventory.